Hi guys, welcome back to High Yield Intraday Trading. I hope every one of you is doing good. So the topic that we are going to discuss today is on Bollinger Bands with respect to the intraday trading. It's actually, the usage is actually widespread, and as per the requests, I would give you a technical overview of what Bollinger Bands are, what makes up a Bollinger Band, and how do we use it in the live market. Okay, so like many other technical indicators, Bollinger Band also is being used widely, and of course it is efficient enough to reward you with some great trades. Okay, now the catch is the usage of Bollinger Band is a bit tricky, and some of the fundamentals about its usage is rumored around. So I will try my best to let you guys know how exactly it should be used in the live market. Okay, so coming to what is a Bollinger Band. Bollinger Band is a technical indicator that consists of three bands, or you can say three lines, and the price movement of a particular stock is encapsulated within the upper band and the lower band. Okay, basically you can say that it provides you with the relative boundary of the highs and lows of a particular stock. Okay, now there is another band in between the upper band and the lower band, which is called as the middle band. Now the middle band is nothing but the 20 period simple moving average, the 20 period SMA, which works like a trend indicator. Okay, so basically if the prices are above the middle band, we say that the stock is in uptrend, and if the prices are below the middle band, we say that the stock is in downtrend. Okay, and the upper and the lower Bollinger Band is the measure of the volatility. Okay, they measure the volatility. Okay, they let us know how volatile is the stock. Okay, so the upper and the lower Bollinger Band is the measure of the volatility to the upside and downside of a particular stock, and the calculation are based on the standard deviation from the middle band. Now we don't have to get into that topic because that is out of scope of this video. We don't have to know the mathematical calculations for the standard deviation and the stuffs like that. Okay, because we can just go ahead, plot the Bollinger Band and start using it. Okay, so this was the explanation for what are the things that make up a Bollinger Band. Okay, now coming to some of the rules that needs to be followed while using Bollinger Band. You don't have to change the settings of the Bollinger Band. First thing, the default settings just work fine. Okay, you need to know how to write the band. That is the second thing. What I mean is, it's told that when the candlestick breaches the upper or the lower Bollinger Band, the price will start retracing towards the middle band. Okay, now this is not true all the time. It might be the case that if the candlestick breaches the upper or the lower band, it's the start of a big move in a particular direction. Okay, now in which direction the stock will move is something which I will show you on the charts. Okay, so you need to know, it's very important for you to know when to do what. Okay, also you can trade the ranges. Okay, now I mean, if you see that that a stock is stuck in a range, okay, and you are using Bollinger Bands, then you can short the stock when the price tests the upper band and your target will be the lower band. Okay, and at the same time you can go long when you see that the price is testing the lower band and your target will be the upper band. Okay, but this will be more like a scalping if the difference between the higher and the lower band is not decent enough. Okay, so practically in day trading, I would say it will be very tough. Theoretically it's easy to hear, you can think that okay, I can do it, but in practically when the market is on in the live market, if you don't have a decent gap between the upper band and the lower band, it will be very tough for you to make decisions. Okay, it will be very tough for you to scalp that particular stock. So let's stay out of it. Okay, let's concentrate on something else. Okay, so one of the most important thing why the traders use Bollinger Band is to catch the breakouts. Okay, so a narrow channel, or you can say a tight band, is formed initially, and whenever there is a tight band being formed, we can expect a good move in any direction. Okay, and as I said, in which direction the move will go, I will show you on the charts. Okay, and how do we use it? How do we have a sense of in which direction the breakout will happen or the breakdown will happen is something which I will show in the charts. Okay, so let's move on to the charts without more talks. Let's move on to the chart. Okay, right. So let's take the help of the high gainers. Okay, let's take the help of the high gainers from the FNO securities. We have Ashok Ley, PL, Bata India. Okay, let's take Ashok Ley. Okay. Okay, so this is how the Bollinger Band looks like. Okay, so the upper green line is the upper Bollinger Band, the lower green line is the lower Bollinger Band, and the red line in the middle is called as the middle band, which is nothing but the 20 simple moving average. Okay, now the thing to remember here is that the 20 moving average works as a very strong support and resistance. Okay, so that is number one. Now coming to the channel formation, what exactly do we mean by channel? Channel is, we say that the Bollinger Band has formed a channel when we see that the upper Bollinger Band and the lower Bollinger Band are almost parallel to each other, and they are like, the difference is not much. Okay, so we can very well say that this is a channel, right? Just a moment, I'm sorry. Let me move it. I'm sorry guys, I have some problem with the mouse. Let me move this. Okay, all right. Right, so this is a very narrow range, and the upper band and the lower band are almost parallel to each other. Okay, so we can say that this is a channel. Okay, now whenever we see that a channel is being formed, we should get a sense that some move is going to happen either in the upward direction or in the downward direction. Okay, now before I discuss any further, one more thing that you need to do if you are a Bollinger Band user, one more thing which you need to do is to plot the volume histogram. This is the volume histogram, right? So the green candles are the buying pressure and the red candles are the selling pressure. Okay, the volume histogram lets you know that in which side either the buyers are winning or the sellers are winning, who is dominating the market at that particular time. Okay, so this is something which you have to draw, which is mandatory. Okay, that is one. Second thing is, we talked about channel, and before I discuss the breakout, okay, let me discuss about that scalping thing. Okay, so if you see here, we know that whenever a price tests the upper Bollinger Band, we can go short. Okay, and the target will be the lower Bollinger Band, and whenever the price tests the lower Bollinger Band, we can go long, and the target will be the upper Bollinger Band. And the same thing is happening every now and then, right? Every now and then. Here the price tested the upper Bollinger Band, you went short, and it came very near to the lower Bollinger Band, and that will be your target. Now you know that the price is testing the lower Bollinger Band, so you can go long, and your target will be the upper Bollinger Band, right? So every now and then it is happening. But the thing is, in live market, will you be able to take these type of trades? I don't think so. At least I will not be able to take it. Okay, so that is the reason why I asked you or requested you to avoid scalping using Bollinger Bands. Okay, rather we will concentrate on the breakouts. Okay, now as I said, the red line that you see is the middle band, which is nothing but the 20 SMA. Okay, now let's start from here. Okay, so this green candle actually breached the 20 SMA and closed above it. What does it mean? That means that the price actually breached a resistance. So the expectation is that the price will go up. Okay, so you took a long position after this candle was done. You took a long position when this candle started. It gave you a nice move. Okay, and it closed above the upper Bollinger Band. Now two things can happen. Either the price will try retracing, or it will continue in the upward direction. Now how do you know that what will happen? Okay, like nobody can be sure about it, but what you can do is you can anticipate, right, by using the technicals. So here comes the volume histogram. If you see the volume at this candle, it is a huge buying volume that has taken place, right? By seeing this green volume histogram, you know that the buyers are dominating. So chances are there that the breakout will be, or the breakout has happened in the upward direction. Okay, so you decide to stay back in the trade. The next candle, again, it's the same. It's a green candle with a lower wick, right? So it tells me that the buyers are trying to take the price of the script in the upward direction. Okay, now see, the next 3 candles are red candles. Now, do you come out of the trade by seeing these 2 or 3 red candles? Okay, don't come out of the trade, because even if they are retracing, you very well know that there is 20 SMA which can act as a support. So keep your stop loss at the 20 SMA. Okay, most of the time the 20 SMA will give the support because the volume of the buyers is high. You have to remember that the volume of the buyers is very high. Okay, so there is all the chance that the script might move up further. We don't have to worry about the script making such small retracement till the time we have the 20 SMA as a support. Okay, and the exact same thing happened. Okay, it went up. So what are the confirmations? First thing is the volume histogram. You see that the buyers are dominating. Second thing you need to see is that the 20 SMA should be moving up. Okay, it is diagonally moving up, right? If you see here also it is moving up. So that gives you the confirmation that this is a breakout in the upward direction. Okay, next thing is that the upper Bollinger Band will also move up and the lower Bollinger Band will move down. These are the 3 to 4 confirmations that you need to see, that you need to observe in order to catch the breakouts. Okay, so you stay back in the trade. So when will you come out of the trade? You come out of the trade technically whenever a red candle closes below the upper Bollinger Band. You can wrap up your trade. Okay, but still at this point also you can stay back in the trade. Okay, because it is just one red candle. Let's see what happens next. Okay, so it depends from individual to individual. Some people will book their profits here because I mean, they will feel that the profit is really huge, so let me book it. Okay, so I am one among them. If I would have been in this trade, I would have booked my profits here. Okay, so but technically whoever is following Bollinger Bands, they can come out of the trade whenever they get a red candle which closes below the upper Bollinger Band. Okay, and then you see here, see how strong the 20 SMA is. It is giving a support. So it was a small retracement which came down, took a support at 20 SMA, then again flew up. Okay, it was moving up continuously. It was moving up again, a small retracement. Here also the 20 SMA gave a strong support. You see this red candle, it never closed below the 20 SMA, it closed above the 20 SMA. So we are, I mean, guys who are in the trade can stay back in the trade. Okay, and see the next candle, and again it started moving up. Okay, so this is the red candle which actually closed below 20 SMA. Okay, so this is the good position to exit the trade. Okay, so this is how it is being used, guys. I hope that is clear. Okay, let me take another example. Which one was that? PL, is it? Yeah, PL. Okay, so okay, this is PL, guys. Okay, same kind of stuffs everywhere. This is a complete channel. Okay, clearly it is a channel. Okay, the breakout was here. Okay, the breakout was here. Okay, this was 31st July, but still I'm saying, okay, this is the example of 31st July, but still the fundamentals remain the same, the technicals remain the same, right? So this was a breakout, it went up, and you can exit at this red candle which actually closed below the upper Bollinger Band. Okay, if we talk about yesterday, this was a channel. Okay, this area was a channel, and you see the volume here. Okay, you see the volume here, it was a buying volume, right? And which is the candle which actually breached the upper Bollinger Band? This is the candle, right? So see the candle, this is the green candle which breached the upper Bollinger Band and closed above it. You see the upper Bollinger Band going up, you see the 20 SMA going up, you see the lower Bollinger Band coming down, you see the volume histogram which is in green color going up. These 3 to 4 confirmations should give you the clarity that this breakout is in the upward direction. So you go long, okay, and you stay back in the trade till this candle, the 12-15 candle, because this is the candle which actually closed below the Bollinger Band. Okay, and then it was a sideways movement and another channel was formed here. See, another channel was formed here and again a breakout. Okay, same thing, volume gives you the confirmation, the 20 SMA starts moving up diagonally, the upper Bollinger Band starts moving up diagonally, and the lower Bollinger Band starts moving down. Okay, so I hope that is clear, guys. I hope I was able to explain it quite clearly. Okay, so if you have any further questions, please feel free to mention it in the comment section. I will surely get back with the reply to you guys. Okay, so yeah, this was about it, and this is how the Bollinger Bands are being used. It is not the case that whenever the candlesticks close above the upper Bollinger Band, it will try retracing. Okay, so the same holds good for the opposite direction also. Okay, whenever the candle closes below the lower Bollinger Band does not mean that it will try retracing back. Okay, it might also mean that there is a big fall, which is going to happen. Okay, so have a note of these things. Your observation skills come into picture when you are trading. Okay, so try to develop your observation skills, and everything else should be good. Okay, so this was all about Bollinger Bands. Okay, the reason why I did not include anything else in this video is because this whole video was related to Bollinger Band. But the next question is, can you just trade using just the Bollinger Band? Is it efficient enough? The answer is no. Like all indicators, this indicator also has some flaws. Okay, so my request to you is, if you are a guy who is using Bollinger Band, make sure that you use some other indicator also. Any indicator which works as a strong support and resistance. Let's say, for example, pivot points. Okay, you can use pivot points along with Bollinger Bands, and the results should be fantastic. Okay, so have these things in mind, and yeah, I don't have anything much to say. This is what I wanted to explain, and I hope I was able to make you people understand how to use Bollinger Bands. Okay, so yeah, that's it for now, guys, and I will come up with some other video in a couple of days. Hopefully that will be helpful to you as well. So yeah, that's it from now from my end, and as always, I would request you to please subscribe and like my YouTube channel, and we will meet again soon. Okay, you all have a very good night. I will see you later. Bye bye.